Hey guys, welcome back to my channel. I know it has been a hot minute. I've been so busy. So I'm studying to be a chartered wealth manager, which I'm doing part-time. I'm doing that. Obviously I have my full-time job. I'm still trying to work out. I joined a new ministry. I'm still trying to have a social life. I still got church 3 times a week. So yeah, it's been a lot. I got the second part of my braces installed, which you can see. So I now have the top and bottom. So yeah guys, it has been super busy. Today I'm going to be talking about property, and the reason why I'm going to be talking about property is because I recently have put my apartment on the market to be sold. So I bought my property through a scheme in the UK which is called shared ownership. So I'm going to be talking a bit about that, and I'm also going to be talking about the other scheme that's available in the UK, which is the Help to Buy scheme. So this is for first-time buyers or existing homeowners looking to move. So as you know, if you're a millennial, one of the #1 topics that people talk about is buying a house. How can I get on the property? The #1 topic that most people talk about is buying a house. How can I get on the property ladder? How can I do it? It's super hard. I don't have the deposit. People don't want to rent anymore because they feel like it's dead money, but then people don't want to live at home because they want to feel independent. So the government has kind of been aware of all of this, and so they have introduced 2 schemes, one called the shared ownership scheme and one called the Help to Buy scheme. So about 2.5 years ago, I was renting in London. I had a really nice place, really liked it, but I was renting it and I wanted to get on the property ladder. So the housing association wrote to me and they were like, we want to give you the opportunity to buy this property, and you can do it through the shared ownership scheme. So what is the shared ownership scheme? Shared ownership scheme, it is available in the UK. It enables you to own a percentage of the property and the housing association own the rest of it. So say for example, the property is 300,000, you buy 50%, so you buy £150,000 worth of the property, and then you get a mortgage on that 150,000. On the other part, so the other 50%, that is owned by the housing association, and therefore you pay rent on that. The rent is usually 2 to 3% of the value of the house, and then you pay that on a monthly basis. So you're basically paying mortgage and you're paying rent, and then if it's a new build or a leasehold, you're generally then also paying service charge as well. So a few good things about the shared ownership scheme. So #1 is that you are no longer just renting anymore. I know a lot of people have an issue with renting because they feel like it's dead money, you don't see that money, etc. So whereas with the shared ownership scheme, you are paying a mortgage and you're paying rent. On the one hand, it's an investment because you've got the mortgage part of it where you're paying off, and the other hand, it's rent. So a lot of people feel more comfortable with that because they're like, okay, I'm not completely throwing all my money away because now I'm also got the mortgage part, which is an investment part, and then obviously you have the rent part. Another reason why people like shared ownership is because generally the deposit is smaller than what you would need on 100%. Back to my initial example, you've got your property worth 300,000, you're buying 50%, which is 150,000, and then the mortgage company say to you, right, we need a 10% deposit on that, which is 15,000. A lot of the time 15,000, especially in London, won't get you a deposit when you're buying 100% of a property. The reason why people like shared ownership is because some people don't necessarily want to fully dive into the property market. Some people are not too sure. You're not sure the way the interest rates are going to go, that the housing market's going to go, potentially the housing market might go down. So therefore, if you own a percentage, then that risk hits you less than it would if you owned 100% of the property. So those are some of the benefits, and those are some of the things that I considered before I got onto the scheme. There are other requirements as well around income. So for certain properties, they'll require that you earn a certain amount, whether that's a single income or combined income, and then there'll usually be a cap on that. So I think sometimes, generally in London, there'll be a cap of like 90,000. So between the two of you, you can't earn more than 90,000. Now, if we're talking about some of the downsides, so on the one hand, you are paying off a mortgage and therefore you're benefiting from paying off a mortgage on that percentage because that's obviously equity that you'll get back, hopefully, when you come to sell it. But then on the other hand, you are still paying rent. And this rent can go up, and usually housing associations will have a clause in the lease that says every year the rent will increase. Now, it doesn't usually increase by a huge amount, however, it's still increasing. So one of the other downsides is that if you do want to buy more of your property, i.e. you want to increase your share, so going back to that example, you've got 50% but you want to increase it to 65%, then you're going to have to go through the buying process all over again. So one of the things that people advise is that if you are doing the shared ownership scheme, that you buy as much as you can to begin with. However, there is another potential downside to that. So if it comes to you selling your property and you own a bigger amount, sometimes that can be harder to sell. If you own a bigger percentage, then it may be difficult to sell that percentage because people generally don't have that money. They're usually first-time buyers trying to get on the property ladder, so that can be a disadvantage because it could be too high for a buyer. So those are kind of some of the pros and cons of the scheme. I have found the scheme helpful. If it wasn't for the scheme, I wouldn't have been able to get on the property ladder. I also find that even with paying my mortgage and my rent combined, it was actually less than the full rent that I was paying when I was renting my previous 2-bed apartment in London. But then the other side of it is I don't want to be continuing to pay rent. So I think that's kind of like the downside for me, is the fact that yes, I'm paying this mortgage, but then at the same time I'm also paying rent, which sometimes at times can feel a little bit frustrating. So moving on to the Help to Buy scheme. It was essentially a scheme that was brought in by the government in order to stimulate the economy. So essentially you've got house builders and they're like, okay, the economy slowed down, people aren't buying houses, what do we do? So the government's like, okay, if you guys do this scheme, we'll introduce a scheme called Help to Buy. You guys can build these brand new houses. We'll give people loans. They'll therefore have enough money to be able to buy these houses. You guys get money. People get somewhere to live. We get interest back on the loans, and therefore you're getting things moving in the economy again. So that's kind of essentially why it was created. What the government will do is they'll give you 40% of the property value if you're in London, and outside of London, I think it's 20%. So let's say, for example, there's a property and it's 600,000 and it's on the Help to Buy scheme. So the government will say, okay, we're going to give you 40% of that. So that is quick maths.
Boom! 2 + 2 is 4, -1, that's 3, quick maths.
240,000. So the government give you 240,000, and then you still have to finance the 360,000. So the idea is that you have a 5% deposit, so you will have 30,000. So that now brings you up to, oh my days, come on, 290,000. And then now you have to finance 210,000 via a mortgage. I'm gonna check this because I feel like, is this quick maths or not? Comes to getting a mortgage, the amount that you can borrow is a multiple of your salary. So you'll go to the bank and you'll say, this is my salary, this is all the money that I get, and then the bank will say, okay, well, based on all the money that you earn, we can lend you this much, and that will be your mortgage. The bank will say they may be able to lend you, I don't know, 250,000. So if you're looking to get 2 beds or more in London, you can't really do that with 250,000. So the bank's like, okay, so we can only lend you 250,000, but you're like, fine, I like a property that is worth, I don't know, 500,000. The government's going to give me 40% loan. So therefore, with the loan, with my deposit, with the mortgage, everything can make up and I can now get that £500,000 property. I hope you guys are staying with me and I hope this is making sense. So that's the main benefit for the Help to Buy. It enables you to basically purchase a property that you wouldn't be able to do without that loan. Another thing that people like on the Help to Buy is that the loan from the government is interest free for 5 years. So for 5 years, all you're doing is paying back your mortgage. Now what happens in the 6th year is that you start paying interest on the loan. And the interest currently at the moment is 1.75%. Then in the year after that, you're paying 1.75% plus RPI. So RPI is basically, just in general terms, just the level of inflation. So currently the Bank of England have a set target where inflation shouldn't go above or below 2%. So whatever inflation is, whatever the inflation rate will be in that year 7, that is added on also to that 1.75, and then you're paying that back. Now the downside is that this doesn't go towards paying back your loan. There are a few downsides that some critics have picked up on with the Help to Buy scheme. So the first one is around the premium of buying a new build. So the Help to Buy scheme is only available on a new build. So what's a good thing about that? It comes with a 10-year building warranty. It also has warranties on your appliances, for example. So you move in, everything's brand new. You can usually get a warranty. I think it's for about a year or 2 years on all your white goods. And then afterwards you can continue. You may pay a small monthly amount and you can continue with those warranties. Now currently at the moment, new builds are being sold at a £65,000 premium. So what does that mean? That means that if the house was, if it was an existing stock, an existing home, you would pay 300,000. But if it's a new build, you're now paying 365,000 because it's a new build. So that's one of the things, is that when you buy a new build, it comes with a premium on it. Other downside is that, so you've now got this loan from the government for 40%, okay? So when you sell your property, it means that you now have to give 40% back to the government. Now, one of the downsides is that if your property has increased in value, the government still get 40%. So if you've made any equity, they get a bite out of that. However, if the property has also decreased in value, then they will take a hit as well. So these are just some of the pros and cons of using shared ownership and Help to Buy. It was a very quick whistle-stop tour on both of these schemes, and undoubtedly you will still need to get more information in order to help you make an informed decision, but I really hope this video has helped you. I understand I packed a lot of information into this video, so if you do have any questions, feel free to comment and I'll get back to you, or if you want to follow me on Instagram on Alex's blog and you want to send me a DM and ask me some questions there, I'll be more than happy to help you. So I hope this video has provided some insight and will help you when it comes to choosing what it is that you decide to do. Anyway, thanks for watching guys, and I hope you will join me again soon. Bye.